Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Market5. I'm your co-host, Joel Elkanen, along with Brianna Valesky, and we have Andrew Keene on the line. He is founder of Keene on the Market. Andrew, how you doing on the day after, a Black Monday that wasn't so black?
Yeah, I mean, yesterday was obviously a very volatile day, and my trading P&L reflected that. I was down a lot, and then down a little, and then down a lot, and then ended up doing all right and actually made money yesterday. Today, I'll probably give back a little bit of that money. I stayed a little bit short overnight in some of the oil names, and those are obviously September positions. But for the most part, considering the fact that we had, such a terrible 4 days, been trading all right. So, today should be interesting. Yesterday was interesting. The S&P 500 futures were down 131 at the most, rallied back 100 points, and then we saw some sellers come into the market, closed close to the lows, and then we're seeing a little bit of a pop back here, oil popping back here. So today's price action will be just as interesting as yesterday to see if we are now becoming seller on every rally, kind of like 2008 was, or if, this 4-day event is, a huge buying opportunity.
Did you have some bad positions that you had to manage off the open yesterday? Did you come in pretty flat? Were you, being able to do what you want, or did you have to manage some risks that you had from prior positions? Because that always makes things more difficult when you're starting out behind the eight ball.
Yeah, when we were trading on the trading floor, I use a software called MicroHedge, and they had something called day trading and positions. Yesterday when I came in at pretty long the market, a lot of different stocks. And I was long Nike, I was long Valero, I was long Yum, and I knew I was going to lose a lot on the open. When we rallied back and got close to unchanged and the futures were only 25, I started laying into all my long positions, took them all off, and actually got a little bit short. And then when the market sold off, I made a lot of that money back. So I did come in long.
Wow.
I saw the S&P selling off probably, about 120 handles in 3 days, and I thought that was crazy. So I decided to come in long on Monday. Obviously, Monday wasn't good, but, I did trade really well. So my positions didn't do well, but, I traded very, very well.
No, it's tough when you have them on like that. And on the other hand, if you start out with a big profit during the day, you can get a little bit careless. First of all, you were trading during the flash crash, right?
Yeah.
Okay, so how could just talk about yesterday's activity, especially off the open? It was kind of like a flash crash, but in like seconds. The way some of these stocks went down. Just give us your perspective. Trading from the flash crash and then in yesterday's action.
Yeah, I remember I was trading the flash crash, and I was buying, I was big in Apple then, and I was trading, and I bought 100 shares of Apple, down every $4. Every $4, I buy 100 shares. And, I looked up at some point, and I was down $12,000 on 100 shares. I kept buying. And then when the market popped back, the second I got back to break even, I sold it all. So, I mean, the flash crash was, something that was kind of weird. I think the volatility is going to continue. I watched the VIX. We saw a 50 print in the VIX. I don't know the last time we saw that. We also saw the S&P down over 100 points. I don't know if I definitely can't remember. I don't know the last time the S&P was down 100 points in a day. So, we see China selling off. From my point of view, you think of the U.S. stock market and you say to yourself, what has really changed in the last 4 days? I don't think anything's changed. We're going to probably hear stories of hedge funds blowing out, big traders, big firms blowing out. I was talking to my friend. I talked to a lot of people in the trading community, and he said a firm in Chicago, not to be named, had their worst day they've ever had on Friday in the history of their firm, which has been around for a long time. So, you'll hear stories about people blowing out. In 2008, we always hear stories that Goldman Sachs was short volatility and they were blowing out. Obviously, that was never true. But, you'll hear stories about firms blowing out. Today's price action is very, very important. The futures have rallied 65 points now. But I expect a lot more volatility going forward. throughout the course of this week and probably through September.
Yeah. So what do you use for parameters on a day like this? I mean, obviously some of these stocks are not going to get back down to their lows, kind of tracing up, near their highs. So would you be using yesterday's high or the close as levels that you'd be keeping an eye on?
Yeah, I'm a big guy in a candlestick formation,
Mm-hmm.
so any candlestick where you can get on any single charting platform will show you the open, the high, the low, and the close. So those are all really important levels. So today, right now, we would make an inside day, which looks like we're going to have a higher low but a lower high. So if we break through yesterday's high, we could test the gap up to Friday's close and then maybe even Thursday's close. So today, 1970, what is also support becomes a resistance. Support to the downside was 1970 on the S&P 500 futures, 1970, 1974, right around there. So that's going to become resistance. So, if we break and hold above 1970, we can test back higher, but we should find sellers there. So like you said, high, low, open, and close are all really important levels.
Yeah, I'm leaning the same way as you. I mean, I'm definitely not buying this open, and I don't know if I want to be short and right into the first bracket. But man, there's just good by there's so many people that got caught on Friday and Monday, and basically you're. I mean, we closed at 1971.50 on Friday, so that's my big bogey moving forward. But some people just must be so happy. We're 110 handles off the low. I mean, this is if this you want to lighten up, and if you think that we're in for some rocky times ahead, I mean, gosh, can you think of a better opportunity than being right back up at yesterday's high today on China news? And that's what took us down. The Chinese markets took us down yesterday.
Yeah, I mean, I always say the stock market is a supply-demand curve, right? And in the short term, it's a difference of what one person's willing to pay and one person's willing to sell for. Like I said, I don't think anything's changed in the last 4 days, but supply-demand curve. And you saw this big, I've been trading for 14 years, so I've been seeing, you see this big sell-off in 2007, 2008, and in general, the retail public sells when they have to, not when they want to. No one ever likes to take a profit for some reason. But you see the market selling off, and you're like, oh, my God, I remember this from 2008. I need to sell right now. So, I see the futures on a high right now as I watch them. They're over 70 handles here. You'll see the VIX getting absolutely decimated today. I see Apple up $6 today, Facebook up about 4. So I'll be watching today's price action, price momentum. And I do day trade as well, so I swing trade and I day trade. So I'll be looking for opportunities to do both of them.
Let's look at Facebook here. I remember you were on before, and you said that was one of your favorite stocks to day trade. I mean, I'm looking at these daily charts here, and I'm just can't. This thing got down to $72 yesterday. Now you said you were throwing out some 100-share bids in Apple. Did you do kind of the same thing in Facebook on the way down there? And also, I just wanted to ask you, when you said you were throwing out 100-share bids in Apple, were you just doing them at the half and whole numbers?
No,
Yeah.
not yesterday.
No?
During the flash crash, I was in Apple. Not yesterday.
Okay.
And during the flash crash, I was doing it. So like Facebook per se, yesterday I have, I trade and I have a lot of option positions on. And I had so many option positions on that I wasn't looking at day trading stocks. So I was long a lot of puts on the open yesterday. And unfortunately, the broker that I go to, not to name any names, was delayed for half an hour. And then when the options opened, they were like $1 wide. So I couldn't. I looked at my positions. I was long Gamma, I was long Deltas, I was long Vega, and about 4 different oil names. And so when the market opens, I want to be selling puts, but I was long. And I just sat there waiting to sell puts, waiting for the markets to open and my broker to go through, and I couldn't do it. So I wasn't focused on day trading yesterday. I was focusing on taking profits in some of my oil names. And unfortunately, I couldn't get out of them.
Yeah, that's when the platforms that's pretty frustrating when things like that happen. Any other issues here? I mean, that you like to day trade in particular. Twitter had a nice move. I saw it got down to $21 yesterday. Now back up $1. Is there any other go-to day trading stocks you'd like to talk about?
My 6 main day trading stocks are Apple, BABA, Facebook, GoPro, Tesla, and Twitter. Those are the 6 that I have. We came out with a proprietary indicator, and when a signal is triggered, I take it every single time, and that is a day trading indicator. And then it's very simple. I have a stop loss in place. I have my targets that I bracket out, and I just watch to see if the trade makes money or not. So I will see today if any signals are triggered, and if they are, I'll take the trade. If they're not, then I won't.
You said it's a contraindicator?
No, it's with the trend.
Oh,
It's,
okay.
each
I
move
thought
is
you said.
cloud-based.
Okay. Okay.
No, so it's each move is cloud-based. So basically, if the market opened right here, there'd be a signal on Facebook with about a $2 stop, and then I have my targets in place. And then there would be a signal right now if the market opened in Apple as well, but the market's not open yet. So we'll watch price action on open.
And you use that opening price. No, it's nice to have systems like that you have faith in, because in this kind of, you know what the risk and you know what the reward is, and you can keep that in, in your trading parameters. We've been on the line with Andrew Keene. He's the founder of KeeneOnTheMarket. He's also the author of Trade to Win Using Unusual Options Activity. And sorry you couldn't sign in yesterday. I don't think you were alone in that, but hopefully all systems are go today and you can have a great trading day.
Thanks for having me on.